This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios here in Mumbai as always. I'm Prashant. With me, my colleague Surbi, and Nigel is making a comeback after a well-deserved break.
Well,
welcome back, Nigel.
Morning, guys. Good morning, Prashant. Good to be back as well. And I was in Uttar Pradesh, where's my in-laws, and I had a great trip out there. A couple of factors that stood out. One is the hospitality. Surbi tells me nothing beats it out there. Wherever you go, very, very homely. But the other problem I think out there is we are talking about the heat here in Mumbai. Yeah. It's another level out there. I was in Allahabad, I was in Kanpur as well as Lucknow. And the dry heat over there, it's quite intense. And when I reached, my family member said, Damadji has come. It should rain before you leave Kanpur. To my good luck, just before I boarded the flight, it did rain. So fingers crossed that we see the monsoons pick up out there, because it's really hot, for the good of everyone.
Oh, yeah, absolutely. In fact, I was going to ask you exactly that. What's hotter? But I think you've answered the question before I could ask it.
Extreme heat.
Hopefully, you're the good luck that we need for rains. Apparently,
so Lucknow is home for you as well.
My grandparents, yes, lots of childhood memories. But I'll always bat for North Indian hospitality. Prashant, you've spent a lot of time in the north, so you're South Indian.
Hospitality, Damadji hospitality beats the heat.
Oh, actually, across the country.
Another league, but I'm saying, on the whole, people are very warm out there.
Absolutely. Well, let's kick it off with the market in terms of what you need to know. So you've got a repeat. Almost yesterday we saw a repeat of what we saw day before yesterday. Almost. I mean, I'm saying because the price action was not a mirror image, but pretty close. For example, day before yesterday, the market made a low early on at about 10:30 or so. Yesterday, the market made a low at about 11. And then the bulk of the day, the price action was pretty similar too. Like day before yesterday, the market spent the bulk of the day just consolidating, but slowly and steadily moving off the lows of the day. Very slow, consolidatory kind of price action. The one thing which was missing was that unlike day before, there was no last-minute rocket-like activity which took the market up 70, 80 points. So it was quiet all the way through to close at 3:30. But in any case, the point is, the market refuses to stay down for more than a couple of hours, and that is something which has been pretty evident out there. Do we have supportive cues from overnight? Not really. It was actually a pretty blah kind of a day. I mean, if you look at Wall Street cues, S&P was down about 0.5%. NASDAQ, that lost about 1.2% or so. We were all talking about and waiting for, what Fed Chair Powell would say in his testimony to the Congress. And by the way, it's a two-day thing. So he testified yesterday and he testifies today as well. But, you'll see lots of headlines about what Powell said and this and that. There wasn't really anything really new in terms of what he actually said. The one sentence which I think is being quoted quite a bit is what he said. He said, Fed remains, and I quote, far off its inflation goal, which means that, there is a fair bit more heavy work to do before they get to that 2% inflation number. But the point is, it's not new information. He said this and he said that. And the last Fed meeting was confusing, right? Because they paused, but they said, well, we got two more to go. So it doesn't really provide new insights into what we heard just last week at the FOMC. Now, the surprising thing was another Fed member who is a non-voter, by the way, Bostic, who came in and actually sounded very, very dovish. He basically said that policy may now be sufficiently restrictive and the bar to hike more is very high. And that is a non-voter, so, less influence, but this was interesting for the market to kind of hear. Let's just get back to and focus on the levels here that you need to kind of work with. It's not very much because the market's not gone anywhere for the last couple of days, except the fact that we've seen dips and then we've seen those dips being bought. So the broad range continues to be between 18,450 and about 18,900. We're closer to the top end of that range. And one just hopes that when we take this out, you do it with some gusto, some enthusiasm, and not this slow creep higher, which we've had for the last many days. In any case, let's look at the lower levels where it would be more advisable for one to get in if you do get those dips and not trying to chase moves higher. So the support comes in at 18,660. That is nothing but the low that we saw day before. And it kind of coincides with last Thursday's low when the market had sold off. And then under it, you've got the 20-day moving average, which comes in at 18,637. The Bank Nifty has resistance at the recent high of 44,083. I mean, this is just a couple of days back, the high that we made. The support for the Nifty Bank comes in at the 40-day exponential moving average, which is 43,487. We left off at 43,859. It's been, as someone said, I mean, the only strategy which seems to be working is intraday. That is, I mean, if you're trading, is to just try and look for a dip, buy the dip, and maybe sell a little higher, and that's working out. So the supports on the lower end of the range for both the Nifty and the Bank Nifty should come in handy if you're doing that. But hot and heavy action continues in mid caps and small caps, even though I might add yesterday NSE advanced decline by close was in favor of declines and not advances. The market on the mid cap and small cap end did come off a little bit, but it's still pretty good, looking pretty good. And that's where bulk of the action has been. Surabhi.
Well, Prashant, take your point. What Fetcher said yesterday probably isn't anything new, but it does reinforce that they're not done hiking.
Yeah.
And I guess that's why markets were kind of sulking a bit, if I could use the word. So I thought I'll just put up the exact lines from that commentary, if you can get that up on the screen. Jerome Powell said, and I quote, "Inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go." As Prashant said, not new, but it just reinforces their thinking that they don't want to keep the foot off the accelerator just yet. And he goes on to say nearly all FOMC participants expect that it would be appropriate to raise interest rates somewhat further by the end of the year. So once again, that whole thing of that this is a skip and that we're doing a hike in July, all of that is on the table. Interesting reaction according to in different asset classes and markets. The dollar actually sold off a little bit after the comments because some people in the currency markets probably didn't find this hawkish enough. They probably wanted a stronger reiteration that rates need to go higher. So initially the dollar index had sold off. Then right now it's kind of flattish around the 102 handle. By the way, speaking of central banks in the fight with inflation, yesterday we got data from the UK, which is not very comforting because inflation there did not fall as much as anticipated. That's May CPI we're talking about. 8.7% was the number. And core inflation actually accelerated month on month in the UK. So this whole inflation bogey isn't just done and dusted as yet. Going back to the US market, it was interesting to note that the selling in US tech stocks has gotten a little more pronounced. This is the part of the market, of course, that's rallied the most. But yesterday, a lot of chip-making stocks, by the way, Intel, AMD, they were down quite a bit, down between 5 and 6%. So it was selling that you can't ignore. The Bitcoin is rallying. Interestingly, as the US market has been dithering on the equity side, there's some interest in the crypto markets for sure, the highest levels that we've seen in the last 2-3 months. And what's happening is that now you have mainstream financial companies that are talking about launching ETF products with crypto as an underlying. I mean, one of them, I think, is a Bitcoin product that BlackRock is speaking of. And that's why you're seeing a lot of excitement and action in the crypto market. Just, wanted to put that on the table as well. Finally, if you're talking about the flows picture, we have to keep in mind the kind of intense block deal action that we're seeing, which is why we've got such a huge number on the FII net buy, 4,000 odd crores. Count in the blocks that happened yesterday for perspective on that. Domestic institutions were also buyers, about 550 odd crores. But Nigel, we've been discussing this. Maybe the Nifty's been waiting for you to come back. I'm not too sure. But this fear of heights has been really playing out. It's all about individual stocks. Today we'll talk about Z. We'll talk more about Lupin as we go along. But index level, it's there, but not quite there.
Before I left for the short vacation, I whispered to the Nifty bull, wait for me. When I come back, go ahead. Tease them a little bit, but don't go there.
I think that's what it is.
And it's either today or tomorrow that those fresh all-time highs will be hit for sure. That's my reckoning. You just look at it, the December 1st highs, that's still elusive as of now. But otherwise, the Nifty bull has been teasing you, almost getting there and then, in fact, moving away. So we're hoping 18,888 in the next 48 hours, we're going to be there. But yesterday, it was good to see actually some bit of consolidation from the broader markets. The advanced decline ratio ended in favor of the declines. And also you had the small cap index that was relatively underperforming, which is okay. The party is still on out there, but you don't want that index to just run away. So I think that's a healthy sign, actually. The bull market in the small and mid cap space is alive and kicking, but some bit of consolidation is something that I wanted to see, and that's what came about. Now, what did the FIs do? Well, there was some lightening of positions, both on the Nifty as well as on the Nifty Bank open interest, and that's precisely what's showing up in terms of the FI data. On the option side, no big trigger, whether you're looking at the buying or even the selling of options that they did. you're not getting any direction. But for the market on the whole, the 18,850 put and the 18,800 put, between them, there was 90 lakh shares that were added out there. And there was writing that was seen at both those two strikes. On the upside, 18,900 call, where the bears believe that's going to hold out, and the premium out there is around 25 rupees. So just plugging in the premiums with those strikes, you're getting the support for the day. And we're likely to start off closer to those levels. Support 18,775 on the downside, around 18,805. This is going by the writing that we've seen at 18,000 put as well as 18,850 put. And on the upside, since the premium on the 18,900 call was around 25 rupees on, you're saying that in fact for the day, that should be the range that you're looking at. The Nifty Bank, that's been consolidating a little bit, finding support at around that 43,400 odd mark, not able to conquer that 44,000 odd mark. So those are the two goalposts for you. The 50 DMA is, the recent level from where we did see a bit of a bounce. And on the upside, that 44,000 odd mark, it's being a bit of a hurdle for the bulls itself. The SJX will be suggesting a 50-point drawdown, I think close to 40 to 50 points on. We're going to be starting in that support zone. So 18,775, that's the stop loss, if you're looking at getting in or you're looking at a stop loss for the day. So keep an eye on that. I think you need to get in at some point of time. And then, in fact, hopefully we hit those fresh all-time highs.
Lower the better, right? I mean, a deeper pullback, the better. It kind of opens up the risk reward in that sense. But before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We'll get you updates from markets across the globe. Cameron Brandt of EPFR Global will join in to discuss the global setup. He tracks global fund flows very closely. Our research team will get you the top 10 stocks of the day that will be in action one way or the other. And Deepan Mehta will join us at 8:30 with what he's making of things and his view on the latest news flow. Well, let's get you some views now. This is from Money Markets. On rupee, Parul Mittal Sinha of Standard Chartered Bank says the dollar INR has continued to trade in a narrow range in weaker dollar, even as FPI flows from equities and consistent dollar purchases by PSU banks cap the downside. She expects the dollar-rupee pair to trade between 81.85 to 82.25 to the dollar next week. With dollar as the key driver, we'll watch for cues from Chinese yuan as well.
Okay, on bonds, Parul Mittal Sinha of Standard Chartered Bank says bond yields saw upward pressure on domestic supply worries, positioning and elevated global yields despite some correction on hawkish Fed, ECB and similar expectations from the Bank of England. She expects the Indian 10-year benchmark bond yield to trade in a range of 7 to 7.1 over the next week, with the focus now on monsoon trends given the weak start and higher domestic supply.
Well, a lot of stock-specific action for you, and we'll get to that in just a wee bit from now in our special Top 10 segment. But let's list out the stocks for you. TCS, Z, Delivery, LTI, Mindtree, Shriram Finance. We have HDFC, AMC, Timken India, as well as ONGC. There's stocks on the back of positive news. But on the flip side, you have Sansera as well as All Cargo Logistics, which are stocks which could be reacting to negative news flow.
Okay, well, let's hear it from Fed Chair Powell, and this is from his testimony last night before the House, U.S. House, and what stood out, what's of course being highlighted, which is the fact that when he said, they're far from done in terms of reaching the inflation goal. Listen.
I guess I would say this economy is very strong, and what's driving it now is just a very strong labor market. There's still significant demand for workers. There are more job openings than there are unemployed people. Wages are moving up, and that's really what's driving the economy forward. People's disposable incomes are coming up. Inflation is moving down gradually. The thing that troubles people, and I think the thing that accounts for the surveys you see, where despite a historically strong labor market, people are still concerned about the economy. It's really inflation. So this is our job, is to bring inflation down. The way we do it is by raising interest rates, and while that can be painful, what it does is it gradually slows down demand so that supply and demand can get back into alignment, and so that we can have inflation running at 2% and people can get on with their lives and basically not have to think about inflation. The level to which we raise rates is actually a separate question of the speed with which we move. Earlier in the process, speed was very important. It's not very important now. We were at 75 basis points for several meetings, then we were at 50 basis points, then 50 basis points, 25 basis points at 3 consecutive meetings, and now we're moderating that pace. So we only have one interest rate to raise or lower. It's not true, but mainly one main interest rate to raise or lower, and it applies to everyone. But I would say that inflation hits LMI communities and people generally at the lower end of the income spectrum much harder than people in the middle or at the high end, because high inflation can get you into trouble right away if you're living on a fixed income just to cover the basic necessities. So it is for the benefit of those people that we must get inflation under control. It's for the benefit of all Americans, but particularly for those people. And we keep that in mind as we are strongly committed to getting inflation back down to 2% over time.
Cameron Brand is now joining us, Director of Research at EPFR Global. Cameron, good to have you with us here. Thanks very much. What are flows telling you, Cameron? I mean, FII flows into India have been strong, very, very strong. I mean, actually, you know, we are getting a lot of selling from promoters, insiders. All of that is getting absorbed very, very easily here in India as the market continues to hover around all-time highs. But what's the latest picture, flow-wise?
Well, India is one of the few good stories left standing at the moment. The previously extremely bullish sentiment towards China has been hit with a number of reality checks. There was a sort of very short-lived burst of relief flows in the wake of the Fed holding rates the other week, but the lens there shifted very rapidly to the signals that Powell is sending, that they don't see the war on inflation as anywhere near one. And I think we're sort of looking this week at flows certainly to U.S. equity funds turning negative again.
Cameron, if you can hear us, sorry, we kind of lost you there. Could you just complete that point? What is the outlook on flows to a market like India for the time being?
I think the outlook is good. As I said, at the moment, there are not a lot of stories that investors can really wholeheartedly embrace. India at the moment is one of them. China was perhaps the other, but as their post-lockdown bounce loses steam, investors are starting to really kick the tires on that story.
All right. Hi, Cameron. Good morning. What about the flows to, I mean, how do you see it move? Are you seeing incremental money move towards equity, or do you see more amount of money move to safe investments, say bonds, gold? You know, the last time you stated that select markets, we are seeing some interest out there.
Yes. Though it's changed for the past 2 weeks now, prior to the Fed's decision, it was liquidity funds that really were sort of number one in terms of attracting fresh money. And then that was followed by China equity funds and US and European sovereign bond funds. At the moment, again, it's a pretty thin group that is reliably attracting fresh money. Global equity funds with the broadest possible mandates are still doing quite well. And not just because I'm talking to you, but India equity funds are on a very strong run of weekly inflows. And the volume has been climbing each week. The other interesting thing is that the India bond funds are beginning to come back into favor again. The flows to them have been fairly subdued for a while, but they also have been picking up steam in recent weeks.
Okay, got that. That's good news for our bond markets as well. Cameron, finally, what is the sense you're getting on money moving into or out of China? Because we've been getting this narrative from a lot of fund managers that we speak to, that a lot of this money is looking for newer markets. A lot of it has already made its way to Japan, for instance. What are the numbers saying now?
The numbers are starting to back up what you've been told by the fund managers. Though investors are still hoping that the Chinese dynamo will hit full steam we are not seeing the really consistent, extremely high inflows week in, week out that we were seeing even a month ago. Yeah, the narrative is definitely beginning to change there. I'd qualify that by saying that there is still a lot of hope in segments of the investment community that this stumble by China will spur authorities there to much more aggressive stimulus than we've seen so far. If the authorities show signs of delivering on that, I think interest in China will tick back up.
Okay, sure, Cameron, got that. Let's see. Disappointment is really showing up on the Hang Seng the last 2 days, right? With these little tinkering of 10 basis points rate cuts that we've seen in China. Thank you very much for giving us the perspective on fund flows. Always good talking to you. We need to take a very quick break on that note. On the other side, our list of top stocks to watch out for this Thursday morning.
Welcome back. You're tuned in to Bazaar Morning Call and hope you're having a good morning. Well, as promised, let's get straight to the stocks that we're tracking for you. Our research team is standing by with CNBC-TV18 top stocks for the day. Manglam, you go first. Tell us on TCS.
Well, I'm filling in for Rima, and you know, it's interesting for TCS. A couple of days ago, we got an announcement that one of their deals were cancelled, but now they've gone ahead and added another deal to it itself. They've expanded their strategic partnership with Nest. The initial deal value is roughly £840 million over the next 10 years. But if this deal were to be extended to its entirety, it could be actually about £1.5 billion over the next 18 years. So that's a positive. And remember, the IT stocks, large cap IT stocks have been well bid over the last few days. TCS itself ended at the high point of trade yesterday. And at the same time, this week itself, it's up around 2.5%. So expect some extension of these gains coming by on TCS.
Okay, got that. Mangalam, thanks very much. So TCS on our radar for sure, as will be Z Entertainment. We've got Surabhi joining in. Surabhi, morning. So the flip-flop continues. But now we have, a word from the man himself, Mr. Puneet Goenka.
Yes, that's right. So he has interviewed with Mint, and the report states that, and he says in the report that merger is the utmost importance of him, and the merger should go irrespective of whether he is the CEO or not. He further adds the merger will benefit 96% of the shareholders. Therefore, it is in the larger interest of the entire ecosystem if the merger goes through. So that, along with Sony's statement yesterday that they are committed to this merger, will bode well for Z today.
Okay, the Sony story was a source-based story, which is, of course, from yesterday. But this is, of course, on the record, Mr. Goenka saying that with him or without him, the deal is on, and I think that should relieve markets quite a bit. The stock sold off day before yesterday by 6%. It recovered almost 8% yesterday, and I think it should sit up and take notice to this interview in the papers as well. But Nimish is now with us. Nimish, morning. It's raining block sales, right? Blocks after blocks. It's difficult to keep track. I mean, so many of them.
Absolutely, Prashant. We saw large
gets
blocks.
to sleep.
We saw a large block yesterday. Again, last evening, 2 blocks got launched. The first is Sansera. In Sansera, a large private equity investor is selling 14% of the company's equity via block deal. I understand the demand is strong, but the price indication is between 800 to 840, which means up to 5% discount. Need to see how the deal gets executed, whether in the pre-open or in the open market. But the demand is strong is what I understand, but I'll go with the red because there is a up to 5% discount in today's block. So that's first one. The second one is delivery. Even in delivery, there is a large block. Carlyle is looking to sell stake worth $86 million via block deal today. The price indicated is 385, which means only a 0.5% discount. So it looks like this is going to get executed in the block window, and hence I'll go with green on delivery. Last lot from Carlyle, it's a clean out trade. So you could say a bit of green in delivery. But for Sansera, need to see how the stock gets treated, how the deal is done, whether in pre-open or post-opening.
Nimish, any sense on the Aptus block deal yesterday? Do we know what happened there? I mean, there was a large block at open, right?
Yes, it's part of the disclosures as well. So the private equity investor was the seller in yesterday's block, and a couple of domestic funds bought. So largely it's been reported in the block deal as well, and this was expected. I guess even in Aptus, this looks like it was a clean out trade from the private equity investor.
Okay, all right, Ramesh, thanks a lot for that. Raining blocks, hopefully it rains as well because, we've been waiting for the monsoons. But Mangalam, let's go back to you. Tell us about All Cargo Logistics as well as LTI Mindtree.
Well, for All Cargo Logistics, it's the monthly business update that has come by, and there has been some slowdown. In fact, their less than container volume growth, which is basically a more profitable business for them, saw a 5% decline in volumes year on year. Month on month, though, there was an increase of about 3% The company said that container utilization has declined due to inventory destocking. The same time last year, people were stocking inventory ahead of COVID uncertainty, and now that seems like a distant memory. Full container volume growth, however, has been weak both month on month and year on year. There's been a decline of about 11% year on year and 4% month on month. So see some red on All Cargo Logistics. And LTI Mindtree, this is interesting because you remember the time when software was famous, a lot of companies would come up with software, .com was famous, platforms were famous, and now AI is famous. So they've launched a generative AI platform called Canvas AI. This will, of course, help enterprises jumpstart their business and scale generative AI capabilities. But AI generally, has a potential of increasing global GDP by 7% as per a Goldman Sachs report. So this is a positive for them. And the total AI market size actually currently close to around $165 billion in just 7 years could cross $1.5 trillion. So it's a huge market potential. But then again, it's artificial intelligence. A lot of people will enter here as well.
Absolutely. Put the name, the acronym AI on anything and, people get excited these days. Thanks for that, Mangalam. Let's go back to, I think, Vivek. Vivek, you've got data on all those mega recent block deals we've had?
Well, absolutely right. Good morning. After the spate of block deals that you're seeing in a lot of these well-tracked counters, a lot of the companies are actually part of passive indices like MSCI as well as FTSE. Yesterday we had highlighted, that there is a chance that there could be an ad hoc inclusion or a weight increase in a lot of those names. And along expected lines, FTSE in fact has gone ahead and notified, the members that in the following stocks, given the fact that there has been increased free float market capitalization room, what they're going to do is on an ad hoc basis, there will be an adjustment on June 23rd. So during the trading session of June 23rd, you will see inflows. So Shriram Finance, post the large block deal, will see inflows of close to $19 million. HDFC AMC will see inflows of close to $16 million. And Timken India too will see inflows of close to $9 million. All of these are estimates, from Nuvama Alternative Research.
Okay, all right, got that. Vivek, thank you for the details over there. Sonal is joining in. We saw a bit of a spike in crude oil prices overnight. Sonal, so tell us, should we watch out for any specific stocks there?
Yes, the oil producers, of course, the likes of ONGC will be in focus. Right now it's flat, but overnight it spiked to levels of $77 a barrel. And it was led by U.S. inventories falling down by 1.2 million barrels. So that's a big amount. This versus an expectation of addition of around 3 million barrels of inventory. So that has come as a surprise. So we will see some positive reaction on ONGC after yesterday's rally of around 2% and fear of slower demand also after U.S. Fed commentary is something which is leading to these movements on oil prices. So we'll be tracking that closely. For now, ONGC will be in focus.
Right, Sonal, thanks very much for that. So that's basically the list of stocks you need to watch out for. Just a quick recap. Stocks with positive news flow are TCS, Z, Delivery, LTI Mindtree, Shriram Finance, HDFC AMC, Timken India, and ONGC, while stocks with negative news flow are Sansera Engineering and All Cargo Logistics. Let's now focus on the brokerage notes to which will be sort of in focus. The big ones. Surabhi is back to Surabhi with that. Surabhi, what are you picking up?
So I'm picking up two brokerage notes, one on Tube Investments by Motilal Oswal. They have a buy rating with a target price of 35.60. They say they expect recovery in the engineering business in FY24. Along with that, the EV business is moving from the investment phase to commercialization phase. The engineering business is expected to grow in double digits with a scope of margin expansion. The metal formed business is to grow at 10% and the cycle business is also expected to recover in FY24. And they are building capabilities in the export market as well. So all positive triggers for Tube Investments. Next on my list is Emami. Now, Goldman Sachs has written on it with a buy rating with a target price of 500. They say there are twin tailwinds that will play out for the company. One is the improving rural demand and the second is the moderation of input costs. Now, they believe the Emami's EBITDA growth over the next 2 years will be significantly higher than what it was in the last 6 to 7 years. There was weak summers which would impact the demand in Q1, but the non-summer portfolio is likely to see a healthier growth pickup going forward.
All right, Tube Investments and Emami, thanks very much, Surabhi, for that. More sort of broker calls as we go along, but there's full 30 minutes to go for the pre-open session. We'll take a break here. Up next, Deepan Mehta, Director at Elixir Equities with some specific stock talk. A little later after that, Amit Mahajan of Paras Defense joins in to talk about their new orders and business outlook going forward. Stay tuned.
Welcome back. So, by the way, just wanted to point out the kind of cuts that we're still seeing across some of the Asian markets. The Hong Kong Hang Seng, for instance, has been reeling under pressure. We'll have the SGX Nifty up for you. That's 40 points lower. But yeah, the mood continues to be a little lackluster. I guess we can put it that way for the time being. Let's actually move on and get to our first market conversation. Deepan Mehta is joining us on the show. Deepan, thanks for joining in. Happy Thursday to you. The stock I want to start with is Z Entertainment. And now this is not for the faint-hearted for sure, given everything that's going on. I mean, it's a real pot boiler, right? We now seem to understand, going by press reports, that maybe Mr. Puneet Goenka is willing to step away. A lot of people will feel if that can happen, then perhaps the Sony deal can go through in its current form. Would you want to, wager on that? Would you look at the stock at all? Because it is at multi-year lows now.
Yeah, good morning, Surbhi, and thank you for having me on your show, and happy Thursday to you as well. But I would have been happier if the SGX Nifty was on the positive side, and again, you would have excitement about Nifty crossing its previous high. But anyway, for another day. Coming to Z, I think it's completely avoidable. With or without the Sony merger, I think they are losing out when it comes to the OTT battle. And clearly, I think Netflix, Hotstar are gaining market share over there. So I'm not that positive on Z per se. No doubt it is cheap. And that's the only thing which is attractive about Z. Apart from that, I think they are facing a lot of stress in the business. And these kind of, controversies and these kind of developments can never be positive. And from a point of view of, creating a good rhythm or momentum when it comes to business. So I would avoid Z at this point of time.
By the way, is Thursday, Happy Thursday a thing? Because
I've started this. We start the build-up, then Friday is happiest, but we start getting a little happy on Thursday.
I tell you, it was Father's Day, or 2 days back, right?
Sunday.
But then later in the evening, I realized there were two more. There was, there was Bikers Day or something.
Oh, is it? No, I went for the Father's Day.
And there was one more thing.
On Sunday itself.
Not sure, but it was one of those days. I said, well, let me check.
Any day is a good day to be happy. And the closer we get to the weekend, it's directly proportional.
Starting to get a little excited. Well, Deepan, good morning and happy Thursday. Just a quick word on, some of these stocks which are rallying in the mid-cap and small-cap part of the market. So it's not a new list, but the point is that it's a longer and more varied list every day, right? So let's talk about Shriram Finance and Piramal Enterprises. I think we got some more detail about what Piramal is netting after after they sold their stake in Shriram Finance. Stock was a big gainer yesterday. Your thoughts?
Yeah, good morning, Prashant. I think this was anticipated for a very long time, and the management had been indicating on both these counts, that is selling off their stake in Shriram Group companies and also trying to reduce their exposure or cut the NPAs when it comes to wholesale lending to the real estate developers. And I think both are going through quite smoothly for the company. I think Piramal Enterprises has lost a lot of I would say, attractiveness with its investors purely on account of the way the NPAs kept on shooting up. They have tried to reduce the NPAs, write off the loans, make full provision. But still, I think on and off surprises do come. I think this will be the last of such a surprise. And I think it's still a company in transformation. We need to see how the retail loans are picking up and how the non-housing loans also are shaping up. That's another focus area for the management. So I think that from kind of a discount situation, from extremely attractive valuations, we are seeing an up move in Piramal Enterprises, and maybe the stock has some more legs to move up.
All right, request to the pen just to stay on for a bit. We're inviting our first management on the show, and since the defense space is buzzing around, let's welcome Paras Defense. That's the first corporate on our radar. The stock, remember, is up close to 20% in the past month. The company also bagged a 53 crore order from the Ministry of Defense, which takes the total order book to around 550 crores. To discuss the outlook and the government's big defense push, we're joined by Mr. Amit Mahajan, Director, Technical and R&D at Paras Defense and Space Technologies. Hi, Amit. Good morning. Always good speaking to you. Well, this 50 crore order is coming, 53 crore order to be precise. How much of it gets executed in this year? That's FY24, and how much gets executed in FY25? And also, last time around, you were guiding for around a 40% growth. in this year. Now, given that you have this order that's coming in, which some part of it will be executed, do you think a 50% odd growth is something that we're looking at for this year itself?
Firstly, good morning and happy Thursday, as I'm hearing. Thank you for having me on the show.
Catching up,
I'm telling you, it's got a nice vibe to it.
But Amit, your investors will want to be even happier. So they want to know whether you're upping that guidance, from 50% on.
They will be happy because if they are in defense and space domain, I think there is nothing to be sad about. So, yes, the order that we've received partially will be executed in this year and partially will be for the next year. As far as the guidance is concerned, we will still want to retain the conservative guidance of 30 to 40%. But this order only solidifies our claim that we will be growing at a good steady pace.
Amit, the last time I think we were talking more towards 40%. I was expecting it to be higher than 40%. Now you're giving us a range of around 30 to 40%.
40% is the range that I would always give. 40% is the range that I would always give. Yes.
Okay, so let's actually talk about, what else you're seeing on the defense side. This is 53 crores. By the way, also tell us, what are the margins that you are hoping to make on this order and how do they compare with the average margins that you have? That's the first part of the question. And second, defense is where all the headlines are with Prime Minister Modi in the US. Our colleagues are telling us that now whatever tie-ups that we do with US companies, that there's going to be a huge amount of technology transfer, more than we've ever seen before. So also tell us what kind of an opportunity does that throw up, if at all, for a company like Paras Defense?
So firstly, on the margins, because now we're making a transition from component business to, as you can see, the order that we received is for a submarine periscope. So that is a complete product in itself. The margins, the value add in this particular product is going to be very, very high and lesser, dependencies on the outside world. Most of things are getting developed by the company and hence the margins will be internal and much better than a component business. This is one.
Can you give us a sense? Amit, can you give us a range? I mean, when you do a product like this, what is the typical margin that you have? Because I think for the year as a whole, your margins have been in the mid-20s, right?
That's on the EBITDA side, yes. On this side, it will be going beyond a little over 30%.
Got it. Amit, the company and the debt, the company got the long-term rating got upgraded recently by CRISIL, right? Correct. Could you talk to us about what kind of impact that will have?
That's a rating agency, and that's only analyzing the kind of performance we've been doing. Company has been short-term as well as long-term debt-free, and we would want to retain that particular status because we've been bettering our working capital cycles. We've been bettering our finances. So I think what CRISIL is doing their job. We're not working for them.
All right, Amit, given that there is a lot of focus on defense globally and, as Surabhi mentioned as well, could see a lot of traction coming in from various markets like the United States as well. Exports as a percentage of business, what is it? Where is it headed? And is there a margin difference between exports as well as domestic business?
The good part is Paras Defense is one of the very few companies who's actually exporting to the US military. And that is very, very encouraging. At the same time, the export percentage is roughly anything between 10 to 20%. It varies from year to year. The company's focus is not export as of now. The reason being the domestic market is so buzzing and so full of opportunities. I don't see a need for us to step up and do exports. The amount of business, if we start executing in the domestic market, automatically the whole world is going to look at you as the manufacturing hub for defense technologies. And I think that transition will naturally come and then the boom of export will happen, say, maybe 3 years from now.
Okay, well, Amit, we'll leave it there. Thank you very much. You're doing well, and we wish you all the best. Thanks very much for joining us here on CNBC TV18. That's Paras Defense, and that space has been doing very, very well. I mean, that kind of reminds me, Mazgaon Dock which is one of the shipbuilders which has done so well. The stock's done so well. Yesterday, I did see a bit of a crack, 6 or 7% lower yesterday. There you go. That's the chart on your screen, but just highlighting it since we're talking about defense as a space.
After Prashant, what I think we're chatting
It's
on
doubled.
this 400. No, more than that. You see, the last 1 year, I think Mazgaon is one of the stocks has probably gone up some 350% or so. So yeah, I mean,
yeah, no,
just look at that. Just look at that chart, right? What do you even say after that kind of an increase?
Absolutely. I mean, it's just been, and actually Garden Reach, Mazgaon, and even Cochin Shipyard. I mean, all three shipbuilders have done very well. But I think the other two picked up this year, while Mazgaon, as Surabhi pointed out, has been doing well for the last year or so. Lupin, Deepan, is a stock going to be in focus? By the way, we'll discuss more on Lupin with the analyst, and the management also joins us a little later. But Lupin and the entire pharma space, you like anything there?
Yeah, Prashant, I think this particular development for Lupin is very positive, and we are seeing good news from Lupin after a very long time, and maybe the up yesterday was also justified. But these are kind of one-off opportunities, and you will have that bump up in the profits when the actual drug is launched for that period of 1 or 2 quarters or so. But thereafter, I think they continue to face structural headwinds when it comes to the US generics market, which has become extremely competitive. And the price erosions do continue over there, and that's spreading, I think, the rest of the globe as well. So when it comes to pharma, we want to focus on domestic pharma companies, and the new listing, Mankind Pharma, is right under our scanner. And we're just trying to find the right opportunity to enter into Mankind Pharma as a measure of disclosure, we just mention a disclosure. And such similar companies, I think, like JB Chemicals or Eris Life Sciences, which are focused more towards domestic businesses, is where I think the larger gains will be, because these companies like Lupin, to an extent, Dr. Reddy's, Glenmark, they will continue to face a lot of pricing pressure overseas.
Very briefly, Deepan, any view on names like Aptus? These are small housing finance companies where there was this overhang of private equity selling. I think in Aptus that has materialized yesterday. Even I think Home First sold off in sympathy. That's another name where there is this overhang. But any thoughts? Growth rates have been very strong.
Yeah, absolutely. I think very positive on these companies, and just need to see how they manage when the actual crunch time comes and NPAs within the sector start to shoot up. But having said that, I think the high growth certainly attracts a lot of investors.
Okay, all right, Deepan, stay with us. We'll take a quick commercial break here, but more stocks we want to discuss. We'll come back. Anuj will be here with a quick trade setup in terms of how he's seeing things. Our technical and futures and options experts will put out trades that you need to be mindful of. We'll put out, of course, the Momentumizer segment and the stock which we'll shine the spotlight on. And, of course, stock boards with CNBC-TV18. Some of the top names which will be in action right at the word go at 9:15. Stay tuned.
Welcome back. Well, the SGX Nifty suggesting a bit of a downtick to kickstart trade, close to around a 40-50 point downtick is what we're looking at, 40 points odd. Anuj will join in just a short bit from now to tell us his trade setup as we speak. But, you know, it's going to be an interesting day because today we have weekly expiry as well that will play out. So I think the way the markets are positioned today, maybe a bit of a dip, maybe look to get in. And then at the higher levels, 18,925 seems to be a bit of a resistance zone. Anuj is with us in the studio. Hi, Anuj. Good morning. How are you reading trade setup?
Morning, Nigel. Well, you know, I spoke about the HDFC Bank move yesterday morning. I think I'll still keep focus on that. There was 1,000 crores of delivery buying yesterday in HDFC Bank, and that helped the Bank Nifty make a higher low, which is important part of the market. The Nifty IT also closed above the 200-day moving average, and I think today's stock to track, obviously on news, is TCS. That also managed a close above the 200-day moving average. The market is showing signs that new highs will come and sustain. Obviously, you'll keep having these gap downs and gap ups. That's okay at all-time highs. If monsoon progresses well, that for me remains the outlier. A sharp move to 20,000 is possible on the Nifty. Of course, won't happen in a week. It will take time, but it looks like the market's headed towards that. And the reason I say that is everyone is expecting correction. The market will not oblige. That's how the markets behave, right? And look at the market liquidity. 10,000 crores of block deal absorbed in 2 days. I mean, and add that HDFC deal, which was off exchange, which was 9,000 crores. Another 2 blocks launched today. I think one of them is about to happen in delivery. And third is even possible. And stocks are surging 10 to 15% after block deals. Just tells you the kind of move that you are. Yesterday, for example, both seller and a buyer in a stock, both were up over 10%. Number of stocks at 52-week high, 241, still in my comfort zone. And every dip is a buying opportunity. For the Nifty, today's weekly options expiry, so there's no trade zone till about 1 p.m. and trades will emerge maybe after 1 p.m. But if you're a compulsive trader, then respect the options range and trade in the range of 18,762 to 18,938. I mean, buy as close to 18,762, sell as close to 18,938. On the Bank Nifty, it's interesting because HDFC Bank has clearly bottomed out and it's positive for the index, though ICICI Bank has still not shown signs of bottoming out. And maybe even a 200-day moving average test is possible, which is around 895. Again, the Bank Nifty is in a range and playing this range of 43,450, thereabout to 44,050 is working. And if you can trade it dispassionately and not get emotional during the day because of intraday moves, this is a range which should work for you and should make money for you.
Okay, all right, Anuj, got that. Thanks very much. Yes, we have been within the boundaries, I guess. Till either side breaks, I guess the ranged action continues. Let's take the...
just to comment, the Sansera block, I think, has just got done, you know, in the special window. So I think that's one stock that we'll be focusing on as well.
Absolutely. That's one. The other is delivery. Expecting a block on delivery as well today. Sansera is up on the screens for you.
And one more, I think Craftsman as well. That's another block that's taken place out there. So in the pre-open itself, the special window, I've seen a lot of blocks. Sansera is what we looked at. Craftsman as well. We should get that detail as well up for you on the screen. So
and it's happening in companies across market capitalization sizes. I mean, from an HDFC, AMC to a Timken to, you know, yesterday Piramal. You have very large companies, big deals, big promoters, small companies, mid caps. It's across the board. I was joking with Nimesh yesterday. I mean, I'd like to meet a couple of these investment bankers. The kind of money they probably are raking in this quarter. I am sure there's a big party somewhere going on out there. Somewhere in BKC, I'm sure.
Just try and step out for a meal or, you know, go to a restaurant.
No wonder they're all packed, all of these party faces.
It's boom time, I mean.
It is boom time, and how, really. In fact, on that note, yeah, I think we'll call a couple of them on the show if they have the time, considering they're really busy with their day jobs. But okay, on that note, let's actually see if we can go back to our technical experts. I think we'll do that. We'll go to Mitesh in just a bit. Dipan, of course, is still with us. Dipan, you tell us, I mean, the mid-cap party is continuing. Undeniably, there's no taking away from that. So any new thoughts, any new ideas that have crept up on your screen for you?
No, Surbi, I think we have enough ideas on our plate just now and more or less fully invested. There are so many investment themes which are working out. Banking space, capital goods per se, and consumption also shaping up well. And now IT also, I think after TCS, we may see some positive sentiment coming through the IT stocks as well. So I think it's a full-blown bull market. And more or less, I think portfolios are doing very well. Within the banks, as said earlier, we like IDFC First Bank. Within the capital goods, VA Tech, Wabag, and Praj are some of the names that we are pursuing disclosures here that we and our clients are invested. And within the IT space, I think specialized niche IT companies like Tata Elxsi or KPIT Persistent is where our focus is on. Again, I think these are all just stocks that we are positive on, but doesn't necessarily mean a recommendation for investors.
Okay, all right. Dipan, I wanted to ask you about Exide. That one suddenly has come to life. If I look at the chart out there, last few days, Exide has moved very, very well. If you pull up, say, the last 1 week or even the last 1 month, any view at the stock, it's around 230 rupees now. In the last 12 months, it's up 70%. Suddenly come to life. Your view?
So I think it's going from deep discount to some amount of averaging as far as valuations are concerned. Lower raw material prices and better demand will benefit Exide because the overall transportation sector is doing very well. Look at the way diesel and petrol sales are moving up gradually. So that certainly is positive for auto ancillaries like Exide Industries. And I think the duopoly certainly benefits the company and they're able to kind of get the pricing going for their finished products as well. But investors have marked down the valuation ratios for Exide purely on account of the fact that they don't have a strategy as far as lithium-ion batteries are concerned. I know they are making some foray over there, and they have some initiatives. But by and large, I think where the EV revolution is taking place, a lot of investors perceive that Amara Raja and Exide may lose out over the longer term.
Okay, all right, Dipan, we will thank you on that note for today. You have a good session, good day. And we look forward to our next conversation. With that, we do have to take a very, very quick break. We'll come back on the other side. We'll, of course, have the pre-open rates and also quickly get to our technical experts, figure out what today's calls are like.
Welcome back. You're with us here on Bazaar Open Exchange. We're coming to you live from the CNBC-TV18 Motilal Oswal studios, and we've been running you through what you need to know as we begin another session this morning. SGX is not indicating, it's indicating a quiet kind of a start, the one that we've gotten used to over the last couple of days. But I think what the market has also extremely gotten used to is that, the dip will come, but it won't last for more than a few hours. It'll get bought into, like what we've been seeing. 18,869 is where the SGX is at. Mitesh is with us, and so is Sudarshan with their technical trading strategies. Gentlemen, great to have you with us as always. Good morning. Sudarshan, how are you looking at the index, Nifty? And just a word, will we sort of break out with some gusto, some enthusiasm, or you think it'll just remain ranged, the upper bound being about 18,900? Go on.
Good morning. Well, at some point, I'm assuming we'll break out above 18,900. Obviously, we can't say when that will happen, today, tomorrow, or next week. But I think this trading range is developing in the Nifty. We are in a strong uptrend. So usually the range breaks on the upside. But for positional traders, the trade is very simple. Be on the long side of the market, keep a stop under 18,700. For intraday traders, that becomes a little difficult because, markets become choppy when they go into a range. And we have options, weekly options expiry also. So for short-term and intraday traders, my suggestion is wait for a sharp intraday dip, go long then, and keep it an intraday trade only. But the Bank Nifty together with this is a complete avoid. A very large trading range is developing. It's anybody's guess where that will break out up or down. So just focus on the Nifty.
Okay, just focus on the Nifty. Look to buy a large intraday dip. That's the call coming in from Sudarshan. Mitesh Thakkar as well joins us. Hi Mitesh, good morning. What's your view on the key index?
Morning, Ajit. We've been talking about markets kind of consolidating. Though the Nifty in the interim managed to make a new high, but it was hardly any significant jump over the previous high. And then momentum on the upside for the large cap stocks as well as the indices is missing because, partly because Bank Nifty isn't really outperforming or adding strength to the Nifty on an immediate basis. So I think this kind of sluggish movement will continue. I expect a range of about 18,650 to about 18,950 on the Nifty. And broadly, you can deploy range-bound strategies, which is try to buy near the lower end of the range, try to sell near the upper end of the range. I think that's the idea. But on breadth is where I think, I've been highlighting for the last 6-7 sessions that the action is, and therefore trading has been clearly more focused on stock sell.
Okay, so that's Mitesh's call. Sudarshan, hi, morning. Let's talk about stocks as well. What's the bias and which ones are you going for?
Well, the bias is on the long side, but because of the options expiry and a lot of stocks are doing different things, it's a mix today. Voltas is an intraday short. The stock is in a downtrend, a clear downtrend. Stop above 794. Short selling should be done only intraday. Reliance is a buying opportunity. This is a positional trade. I do not think traders should actually dabble intraday in Reliance. This is a stock that you want to hold for a reasonable period of time. Buy the stop under 2,500. In the same way, AU Bank is an intraday short. We had a big decline yesterday, and that somehow coincides with the fact that the bank nifty is in a trading range. The AU Bank is suggesting that it could break down from that range, its own trading range. It's a stop above 760. It's an intraday short. And finally, Ramco Cement is a buying opportunity. It had made new highs yesterday on a closing level and suggests more as a opportunities on the upside. Stop under 925.
Okay, got that. So those are Sudarshan's stocks. Mitesh, what about you? What are you going with? Morning.
Yeah, good morning, Sudhi. The first buy call is in Amaraja batteries. We had Exide as a recommendation for last many days, and it's been making new highs. I think some signs of positive traction are coming on the indicator charts of Amaraja. So buy here with a stop at 624. Look for targets of around 675. Buy on Tata Chem, conditional buy because the market is slightly opening negative and the Asian markets is not really positive. So I would want to see the stock get past yesterday's high. So buy about 1,005, keep a stop at 990. Look for targets of 1,045. Sell call on ITC, I think first signs of some profit moving over here. So a pullback to 433 can happen. So this is a short-term sell with the target of, a target of 433 and a stop at 454. And a similar setup is happening on the charts of Mahindra & Mahindra. That's a sell with a stop at 1390 for targets of 1345.
Okay, all right, gentlemen. Thanks so much for that. Well, let's hop across to Sonal. She's joining to tell us which stock is on a Momentum's list. Sonal, tell us, what is the Momentumizer stock that you have for us?
Good morning, Nigel. Well, Avalon Tech is the stock on my radar. It has been gaining momentum in the last couple of trading sessions. The stock ended high by 7% in yesterday's trading session. It's up 27% in this month itself. And it is a recent listing as well, listed back in April, but actually listed at a 1% discount to the issue price of 431 rupees per share. Now, yesterday's volumes were 3.3 times the average volumes that the stock trades at. And the volumes have been picking up as well. So yesterday it was 16.1 lakh, which compares with around 1.1 to 2.3 lakh shares that are traded on a daily basis. So definitely some momentum picking up here. The company is an electronic manufacturing services company. Q4 has been strong across the board for all these companies in this particular segment. So they reported an EBITDA margin growth of around 300 basis points and profits were higher by 113%. So this particular sector continues to see an up move, and that is something that we are seeing with Avalon Tech as well.
Okay, Sonal got that. Yep, Avalon has been a key mover in that entire EMS rally that we've seen. That's 1 month and good momentum on the stock already. Well, let's now get to the futures and options market. Chandan Taparia is joining in to give us some ideas and some trades. Chandan, good morning. What stocks are you looking at, or in case you have any index calls as well?
Good morning. Thanks for having me. So market is just flirting near to its new lifetime high. But the good part is the declines are being bought and supports are moving upwards. The Nifty has been moving in a rising channel. And I think this momentum could extend. So as of now, we will continue to be with buy on decline stance, looking at the technical and derivatives parameters. The index is holding well above its 20-day exponential moving average. Put call ratio is holding well, and India VIX is near to 11. So we believe that any declines towards 18,710, 18,750 could be bought with support of 18,666, and market is all set to head towards 19,000 marks. For Bank Nifty is in a range comparatively, but we have multiple support near to 43,500 to 43,333 zone. So any decline with these support could be bought for upside move towards 44,250 level. And if I compare Nifty versus Bank Nifty, then Bank Nifty is comparatively more stronger than the Bank Nifty index. So we have to be more bullish in Nifty compared to the banking index. Now, looking at the stock wise, first that is buy on Power Grid. We have seen good attraction in most of the power companies, and Power Grid has given a consolidation breakout of last 30 trading session. It has formed a rounding formations. In fact, the weekly and monthly chart is giving a major breakout for 15-20% uptick. Huge open interest addition of around 12 to 13% is seen in last few days. So expecting further rally in the counter, one can buy with support of 251 for an upside target towards 270. Even one can trade in 255 call to play some uptick in the counter with option move. Looking at second trade, that is buy on Apollo Tyre. Nifty Auto is doing well. Most of the auto stocks are in top gear, and we like auto ancillaries, and here recommending to buy on Apollo Tyre. Higher top, higher bottom is clearly visible on the weekly chart, and this stock has seen the good open interest addition, which clearly indicates fresh rally even at current levels. So recommending to buy with support of 406. Stock has potential to move towards 435 to 440 level. Last trading idea, that is buy on SDFC Limited. These market heavyweights have bottomed out, and there is a reason why we are expecting fresh leg of rally in the Nifty and broader market. So it has seen the bullish divergence on the daily chart, bottomed out, short covering has seen with put writing. So looking for an uptick towards 2770, one can buy with support of 2660 level in SDFC Limited as well.
Okay, all right, Chandan, thank you very much. Those are 3 trading ideas you can work with coming to you today from Motilal Oswal. Well, let's move on and now put the spotlight on Lupin. We all remember the stock ran up almost 6% yesterday. This after the company emerged as the first generic player to get a nod for the billion-dollar respiratory drug Spiriva in the US. Of course, Vivek broke that story. It got confirmed within a couple of hours by the company, and the stock was a big mover yesterday. Nithya Balasubramanian, Director Healthcare at Sanford Bernstein, is with us. Nithya, good morning. Thanks very much for joining in. So we will be, of course, speaking with the management in just a bit as well. But before that, let me ask you, yesterday, since yesterday, lots of notes have been floating around. I think people are talking about a $100 million opportunity in some cases. This is a big, big drug, right? What are the numbers you are penciling in, and where does it place Lupin's, portfolio with respect to the global market now?
So we do believe that it's a substantial opportunity as well. When we look at the addressable market, we think it's about somewhere in the zip code of $500 to $600 million. Of course, the reported numbers are much higher, but that's at a gross level. But we think at a net level, it's about $500 to $600 million. Lupin, given that it's the only generic, if we were to expect around a 35% price discount, and if they're able to achieve a 35% market share, you are talking about this being an annualized $140 million kind of opportunity. Of course, these assumptions are entirely dependent on how the innovator, Boehringer Ingelheim, reacts as well. We have seen in other markets where the innovator tends to get a little aggressive on pricing themselves, wanting to retain payer formulary coverage. That's something that we will have to wait and watch. But if they are a bit laid back, this is a $100 million plus revenue kind of opportunity for Lupin. And a lot of the margin expansion that the company has been promising will come through from this product, because we do believe it's a high gross margin and a high EBITDA product for Lupin.
Nithya, do we know of other generic filers for the product, and how that may impact the opportunity for Lupin?
Not yet. I'm not aware of any litigation so far. Anybody who would have filed, you would immediately expect to see some sort of litigation with BI. We haven't seen any. If you look at globally, Teva, Cipla, Hikma, Mylan, these are the companies that normally invest in most of the large respiratory opportunities. I think Mylan has said explicitly that they're not going after Spiriva. Hikma has disclosed something more advanced in the pipeline, and it's not Spiriva. So Teva and Cipla are the 2 contenders possibly, but neither have disclosed their file in the pipeline or the current status of the product.
Got that. Nithya, but the other question that comes to mind immediately is how much of this has already been in the price? I mean, the market was waiting for the approval on Spiriva for a long time. And we'll put up a 1-year chart on the stock, right? We're talking about 35-40% of a rally already. So is it baked in to an extent? And if that's the case, do we start looking forward to some other drug in the pipeline? What's your call?
See, I think that's what we have been saying, that Spiriva has been in the price. I think all of us have been expecting it. Of course, there must have been some divergence in terms of exactly when they would get the approval. But I would imagine most of us in the sell side have baked in Spiriva in the numbers in FY24 and definitely in FY25. So I don't really see meaningful earnings upgrades happening because of the news that broke yesterday. I think the play on Spiriva was actually the multiple. I think the argument that we used to hear from investors was it's in the numbers, but it's not really in the multiple. And that we think happened yesterday when the stock ran up 6% or so. Right? If you look at the multiples currently, Lupin is actually trading at 23x 1-year forward PE. At these levels, it's actually slightly higher than Sun Pharma. Right? And that to me is an indication that it's even the multiple expansion has actually come through. It's in the numbers now. For further expansion to happen from here on, it has to be other products and other strategy that delivers.
Got it. Nithya, now the pharma space is the one large space perhaps along with IT services, which still is not down in the dumps, but it's not at highs at least. It's far off those levels. What's the kind of mood out there? Do investors, institutional investors, want to look at this space? We have a recent new listing, Mankind Pharma, which has done so well since listing. I think from listing, it's up some 45% or so, maybe a little more. What would you recommend to investors in this space now?
See, I think in general, names that have higher domestic exposure do find favor. So if you look at the last quarter as well, Mankind, Torrent, JB Chemicals, the ones that have 60, 65, 70% plus kind of exposure to domestic India business are the ones that did well. And that interest remains. In the US space, though, I think there is a little bit of warming up that I'm seeing to companies exposed to the US space, because tactically we do see the prices recovering compared to last year, and therefore there is maybe a tactical play here. Names like Aurobindo and maybe even a Lupin. So Lupin also does about $700 million in the US. Dr. Reddy's, I would imagine, these three names which have substantially large US portfolios will probably see a little bit of recovery compared to last year in the US generics portfolio. But honestly, that still remains a tactical bet, right? We are not yet seeing a structural reason as to why the US generic market is becoming more attractive. And that's kind of the reason why, if you look at broadly the sector, it's still trading at long-term averages. I think going forward from here, as I said, these US exposed names, I think in the next couple of quarters is likely to find some favor.
Got it. But for Lupin, Aurobindo, Dr. Reddy's, for a tactical kind of play, this would be a good time to buy? I mean, you'd make some money from here?
Dr. Reddy's, yes, I think after the last quarter, it actually corrected quite substantially. I think about 7 or 8% it was down after the last quarter. Dr. Reddy's and Aurobindo as well. So Aurobindo actually has one of the wider portfolios. So any small disruptions that are happening in the market, given their flex capacities and portfolio, they're probably more likely to benefit.
You don't cover Piramal Pharma, Nithya, do you? That's another one where there is a fair bit of conversation. Got it. All right. Thank you very much, Nithya. Appreciate you joining in, and it's a pleasure speaking with you here on CNBC-TV18. By the way, just to circle back to Lupin, we have Ramesh Swaminathan, Executive Director at Lupin, joining us at 9:30 this morning with, of course, what the company themselves makes of the opportunity from Spiriva generic. We'll discuss, of course, that in greater detail. But it's about 9:13, so a little late for the 9:10 call. Sudarshan is with us, and so is Mitesh. Gentlemen, what do you have? Sudarshan, you go first.
Ramco Cement is a buy with a stop under 925.
Mitesh, what about you?
I go with the buy on Tata Chemicals if it starts getting past 1,005. Keep a stop at 990, 1,045 being the target.
Okay, got that. Thanks very much, gentlemen. Let's just bring Vivek back in to recap the kind of weight increases we are seeing in certain stocks. I'm talking about Shriram Finance in specific, because of the block trades that have happened, and indices have then upped the weights, and there's inflow coming in. So Vivek, take it away. Just remind us once again.
Well, absolutely. So Shriram Finance will continue to remain in focus. Yesterday, as you're aware, you actually saw the very large block deal. Some of the important buyers there, Government of Singapore actually picked up 2.44% stake. Society Generale, New World Fund, BNP Paribas, BlackRock, all of them picked up stakes in excess of 0.5% in the company. So large block deal, snapped up by very good buyers. Like you mentioned, FTSE would be increasing their weight. So June 23rd, the Shriram Finance will see inflows of a little over $19 million. And lastly, the stock continues to remain in focus and upgrade through coming in. So Jefferies has gone ahead and upgraded the stock to a buy. They believe despite the rally that they've seen, they see further upside. They've increased the target price to 2,130. What they're saying is that the stake sale by both Piramal as well as TPG removes a key equity overhang, and they believe further rally is warranted.
Okay, all right, got that. Thanks very much, Vivek. Well, we just have a couple of seconds to go before we get to the opening bell, and that's the countdown, 10,987. The pre-open Nifty is absolutely flat. It isn't doing too much. The Bank Nifty is also very, very quiet. Need to watch out for some of the larger stocks like Lupin, TCS, and see what kind of follow-through we're getting. To start things off, the Adani group of stocks has opened up on the positive side. Adani Enterprises, Adani Ports on the large cap screen are up and about. The Nifty itself is down about 20 points. So we're starting with a negative bias. The Bank Nifty is slightly lower. Mid-cap index is absolutely flat. Those are some of the Adani names which have begun the day on a positive note. Tata Steel, JSW Steel, the disappointment with China not doing anything beyond those incremental small rate cuts, that seems to be still showing up in the metal side of the market. Infosys is down. Let's also check TCS's reaction. Very muted. TCS is absolutely flat to the UK deal announcement that they made. Wipro is also down. HCL Tech is down. So is Tech Mahindra. So it's a decisively lower down market this morning for technology. So metals and tech, two down trades immediately. Banks are mixed. So Axis is taking it easy as things kick off. Let's pull up some of the others as well. IndusInd is very flat. ICICI is on the positive side. That's how it is. Life insurers, there's no stopping HDFC Life, is there? Look at the stock. It's a top Nifty winner once again, 1% higher. Speaking of HDFC, even HDFC Bank is doing better. So is HDFC. So the HDFC group is having a good start this Thursday. All of those HDFC stocks are up and about. So flattish trends, Nigel, but I guess, we're really looking out for the mid-cap headlines here.
Well, that's right. Pull up a few stocks post those large trades. I think delivery should come up. There was a large trade that took place earlier, close to $90 million. So delivery is the big stock that's running away. You had Sansera as well, that's higher in today's trading session. So that stock as well has moved up. I think positive take on that stock. Let's pull the intraday chart out there. 6%. Both these two, they are flying away post these large trades. And let's pull up Craftsman's Auto as well. There was close to around 8 to 10 lakh trade that took place in pre-open. So all these three stocks, well, they are calling for attention from the broader markets. Z, let's see whether or not there is a reaction. Puneet Goenka reportedly has said that the merger is utmost importance and it should go through, irrespective of whether he's the CEO or not. So that stock, in fact, is up close to around 2%. A couple of other notable names from the broader markets that are moving, particularly the frontline F&O names. Well, some of them come up for you on the screen. Max Financial, that's up 2%. Manappuram Finance is up close to around 1%. And PI Industry is pulling back close to around 1%. The screen is telling you maybe, in fact, we're bracing for the special all-time highs of the Nifty. We'll know in the next 6 hours or so.
Yesterday, Manglam was alerting that India Cements could come out of F&O ban. It did finally. And that stock's also up about 2% last I checked. So some more green over there. Sula, by the way, spoke to management yesterday. There's more incremental buying now. 3% on the upside. But Prashant, overall, very quiet. Not much moving.
No, absolutely. Very quiet. And so I think we'll maintain our non-mentioning of new all-time highs today. I think reverse jinxing.
Oh, sorry, I didn't know that.
No mention of it.
You can, Nigel. We've been waiting. You're new. You just
it's waiting for me. I'm telling you guys, it's waiting for me. Let's not mention it, but it's happening. 24 hours, 36 hours we're there.
He's put a deadline to it.
I just want the damn thing to happen. Be the end of it, and then we kind of move on. But you're almost there. 18,850 is where we are on the index at this point in time. Well, delivery is the big one. It's the volumes are actually tremendous. Of course, the block there in play. Piramal Enterprises is up another 1.7%. It was the big gainer yesterday. JSW Energy had a big move yesterday. It's up another 3% this morning, 282, 283 on JSW Energy. Bombay Stock Exchange, BSE, we had the management with us yesterday on Bazaar. BSE is up 4%, 595, and it's coming up with tremendous volumes. Sansera is up 5.5%, 887 on Sansera, and it's coming up with volumes again. Max Financial Services, we mentioned that earlier here. this morning. It's up 4.5. Max, by the way, life insurance companies have done well recently, but Max has been the underperformer. So maybe this is a bit of a catch-up on Max Financial, which we are seeing. Sula, we mentioned. Again, Sula was with us yesterday on Bazaar, with some outlook. KEI, a huge outperformer over the last couple of years. It's up 5% this morning. So this is, the biggest volume traded moves that we are seeing. Aether Industries is another one which saw a 10% move, I think, yesterday. There is follow-on 3.5% move. And what's happening with KPI Green? The move started about, a month ago? Less than a month ago, actually. But that's been on an absolute steady roll. It's up 4% this morning once again. C8 is up 2%. These contract manufacturing, electronic companies, Sirma is up another 3%. This quarter, by the way, has meant about 50-60% gains for these companies. Dixon, Amber, Sirma, Keynes. So just flying off the shelf here with very, very strong gains. The Nifty is absolutely flat. But that's the index level action for you. It's all there in terms of specific stocks.
No, absolutely. Even the mid-cap index is not doing anything. At the index level, even the mid-cap index is taking it easy. But yesterday, when we started flat, then the mid-cap index took off. So let's see. I just wanted to mention Z, that there is no runaway move and rally, despite that on-the-record interview with Mr. Puneet Goenka indicating that whether with or without me, the deal should go on. I think the market, there's so many legal issues involved right now that I think the market's taking a more measured approach to it.
No, I said this in the morning, Surabhi. The Sony story, the big thing is what Sony will do, right?
Yeah.
And there was a story day before yesterday.
That was an official statement.
The story which appeared that, will be, there was a presentation made to the Sony chaps in Japan.
Yeah.
That was a source-based story.
Yeah.
And of course, we have comments from Mr. Goenka on the record yesterday saying that, well, it's with or without me, they'd like the deal to go through, which is a assurance.
And Sony yesterday, while that was a source-based story, Sony's official statement yesterday was that we take, the certain issues raised by the Indian market regulator very seriously. So posturing is still very, very careful, I think, around this deal.
Absolutely. So, and of course, it's there's a fair bit of speculation around this, but it's kind of so far, at about 190, goes up to about 200, 210 even, and then kind of falls back on. The consummation of that deal, of course, is going to be the big one. Harsha Upadhyay is joining us now, Chief Investment Officer, Equity at Kotak Mutual Fund. Harsha, good to have you with us here. Let's just start with, all these blocks. I'm sure, all these deals come to you. And is this raining these block sales? What do you make of it, Harsha? How should we look at it? There is, of course, much to be said about the depth and liquidity that people can exit when they want, with the quantity that they want. But as a participant, what do you make of it?
Good morning, Prashant. Clearly, market has seen a lot of liquidity in the recent months. For example, quarter to date, if you look at foreign investor flows, those are almost touching $10 billion. Similarly, on the domestic side, we have been seeing consistent SIP flows. So to that extent, most of the institutional investors are looking for investment opportunities. And some of these deals have obviously been lapped up. But again, there is no generic answer for this. Each of those issues, you will have to carefully analyze and see where the valuations are and what are you getting into, and then take a call. So I'm sure at the beginning of a bull market, you will see a lot of these liquidity-driven movements in the market, and that's what we are seeing right now.
So this is the beginning of a bull market, Harsha. That's what you describe. That's how you're describing it.
Yeah, one can say that. If you look at the kind of move that we have seen for this quarter, mid and small caps have clearly outperformed the large cap Nifty, and Nifty itself has gone up almost 8-9% during this quarter. While fundamentals are yet to change, but markets have seen a lot of liquidity coming in, and valuations have got re-rated. At the same time, one should also keep questioning at every point of time whether the markets are getting slightly ahead of fundamentals in the very short term. So that remains to be considered.
Are they? Harsha, good morning. Are markets getting slightly ahead of fundamentals in the short term?
In some pockets, maybe yes, because as usual, whenever the markets go up, and especially in a momentum-driven market, you will also see a lot of stocks which are not fundamentally strong also go up, and they do go up much more than some of the fundamentally strong stocks. So to that extent, in that basket, one needs to be careful.
So can you, since this is important, Harsha, for investors to keep this in mind while we always, look out at optimistic views, in case you see specific pockets where you're seeing some sense of over-enthusiasm building up, can you identify them for us? I mean, let me put it this way. Let's take defense as a theme. Of course, a very long runway ahead, and we're talking about a massive opportunity. I mean, the theme is fine, Atmanirbhar, indigenization, etc. But the question is, stocks have run up. I mean, 100%, 200, 300%. So, for example, does that pocket worry you? If not defense, is there some other area of the market that worries you?
Absolutely, Surabhi, you're right. Defense is one pocket where we are also very positive from a long-term perspective. We do hold a couple of stocks in our portfolio. But from a very short-term perspective, I think most of these stocks are discounting at least the immediate upside that you can see in terms of fundamentals. What has happened is you do not have too many stocks which are into defense manufacturing at this point of time. And we have also seen a fundraise happening, and money has been raised for a thematic sector fund or a defense-related fund. So everyone knows that money is flowing into this sector, whether you like the valuations or not. And who knows, there could be few more launches in the category, because that's what we have seen in our industry. Whenever you see one or two thematic funds, there is always some followers as well. So if that happens, you could see more re-rating of this basket. While I continue to believe that from a long-term perspective, the sector has a lot of potential, but from a very short-term, one needs to be cautious, because most of these stocks are discounting all the upside that you can see probably in the short term.
All right, Harsha, just hold on to that thought. BSE is actually flying away. The stock is up close to around 6% odd. We'll have to see execution on ground, whether or not they can grab some market share from NSE. NSE in the unlisted market, by the way, is around 3,100 rupees odd, which is around 20 times its trailing earnings. So, these exchanges, financialization of savings, more amount of volumes in the markets, well, there could be a couple of plays out there. And that's why BSE is up close to around 6.5% odd. Harsha, the other point is the monsoons. Now, that's clearly a bit of a risk to the economy, to the markets as well. Do you think at current reckoning, we're just ignoring that risk, the way the markets have run up?
Yes, one could say that. Probably that's not taking the center stage as yet, although it is very early in the season to say that how it's going to pan out for the overall season. But clearly, we all know that there has been a delay. And if you go by the past history, whenever the deficiency of monsoon is more than 6%, that's when you start seeing impact on the agricultural production. That's when you start seeing impact on inflation, etc. So not only we need to see the quantum of rainfall, but also the distribution of the rainfall as you go ahead. So maybe in another 6 to 8 weeks, things will be clear. But as markets go up, in terms of valuations, obviously this also needs to be kept in mind, because the consumption side of the economy is still somewhat weaker than the rest of the economy. So if that is going to see another headwind in terms of monsoon, then things will not be easy.
Okay, we'll leave it there. Thank you very much, Harsha. It's a pleasure having you with us here on the program. Thanks very much for your time here on CNBC TV18. So that's an interesting conversation, as always, with Harsha Upadhyay, with a perspective on things. Now, we have the management of Lupin joining us as promised. Lupin has emerged as the first generic player to get the US FDA nod to sell the billion-dollar respiratory drug Spiriva generic in the US. This approval has come through earlier than expected, and the key positive is that this is a limited competition drug for the next 3 years. To understand the opportunity and how much could it contribute to Lupin sales, we have Ramesh Swaminathan, Executive Director and Global Chief Financial Officer, Head Corporate Affairs at the company. Ramesh, good morning. Great to have you with us here on the program here at CNBC TV18. Thanks very much. Prashant this side. Congratulations first up on this. The market's very excited, as you can see. Could you tell us, when do you launch this drug? And could you estimate the opportunity for the company? What would you net, over the next couple of, after launch the first year, what would be net earnings for Lupin from this drug?
Firstly, thank you for having us on. This is obviously a very important development. This is something which we have been expecting for quite some time. It's about $1.2 billion in terms of size. So, and of course, minus, in fact, the discounts that we give on this, as you would know, with the market itself. it could certainly be a very meaningful addition to our overall portfolio in America. And for sure, we think it will certainly move the needle when it comes to margins and the like. In terms of the launch timeline, we think we would be in a position to launch it in Q2 of this fiscal.
All right. Good morning, Mr. Swaminathan. So Q2, we've got that the time horizon out there, but give us a rough number in terms of estimated sales. For the first year, that's FY24, what kind of a number are you looking at? The street is working with $30-40 million odd, and $100 million, do you think, by 2025?
I think I don't want to go down the path of actually conjecturing on numbers and the like. As you would recognize, it's a pretty large drug. It's very important. And we do believe being the only player in the market, and from a generic perspective, we would be able to get pretty good market shares and, of course, overall volumes and concomitantly the sales as well.
Okay. So, Mr. Swaminathan, hi, good morning. There are also estimates on, roughly how much price erosion, a generic drug like this would see. Some estimates say maybe 30-35%, but you're best placed to answer that, so do tell us.
And I think it will be premature for me to talk about it, and perhaps not appropriate, because given the fact that we are the only player, so obviously it is going to be lower than potentially the generic, the innovator itself. But we do have the ability to price, and we would of course do what is necessary to get us a good, what is absolutely in the keeping of things when it comes to in fact being the only player in the market.
Okay, so just a sense of timelines. The launch is going to be by second quarter. By when do you think you can fully take it, to the market? By when should we see the entire potential flowing in?
Yes, the ramp up would happen. It will happen over a period of time. We think it will certainly have the potential to do very well, being the only player. But I don't want to speculate on, in fact, the way volumes would turn out over time.
Mr. Ramesh, what would be the factors which are keeping you from giving us a number? Could Nithya Balakrishnan of Bernstein was with us earlier. She was saying that in many cases what happens is the innovator themselves drops prices quite a bit. We don't as of now know of any other filers for this. Perhaps there aren't any. But are those risks as you see them?
No, it's just that, as you yourself said, there are several moving parts and so on. I think it's fair to actually, surprise the market. And to that extent, we're just being conservative in saying that, we would get a very good market share. But we don't want to speculate on, in fact, the volumes or the sales for that matter at this stage.
Okay. So, Mr. Swaminathan, give us a sense of, really what the rest of the market opportunity is looking like. If I have the right numbers, I think you were at your US sales for FY23 were somewhere in the vicinity of about 600 million. So with this huge blockbuster drug coming in, tell us more about the rest of the pipeline as well and how you're looking at the US market. What is your take on, say, overall competition, pricing pressure in generics, and what the year ahead looks like to you?
Well, too many questions in the same breath, but I'll try to answer that. In terms of our run rate, we are doing about $170 million on a quarterly basis. With the addition of products like Darnavir, Vernicillin, and now Spiriva, we would certainly do much better than that. And so obviously the current year looks pretty promising with the newer drugs that we're speaking about. And going forward, as we have always spoken, we have a pretty strong pipeline lined up on the respiratory front for sure, and the complex injectables. We've been working on quite a few of those, and the pipeline. In terms of the biosimilars going forward, the current pipeline in terms of OST, the inline portfolio. So we are confident about the immediate future in America, and obviously this has a pretty big impact when it comes to the overall performance of Lupin itself.
All right. Mr. Swaminathan, from around $170 million, the street is banking in that given the kind of approvals you gradually move to around $200 million on a quarterly basis. Now, margins have been a key focus area as well. And the worst of margins appears to be behind you. The question is, by the end of this year itself, can you get closer to around the high teens, the 20% margin odd mark? Could you tell us, when do you get back to the 20? I was just looking at it the last many quarters. You haven't hit that 20% margin. The last time I think was June 2021. So by exit rate for quarter 4, do you get to 20% again?
As you very correctly pointed out, so essentially we have been working on a host of initiatives, essentially, when it comes to cost, cost reduction in terms of various, initiatives at the factory level, at the R&D level and the like, and of course the SG&A spends. And there has been a lot of inefficiencies that we have corrected over the last several quarters. There's some more to come for sure, but the top line certainly, would make a huge impact when it comes to, in fact, the bottom line, which is the EBITDA margins also. And with products like Spiriva coming in, we can only move for, to a higher level. We have guided for, a run rate of over 18% by the end of this fiscal. So our aspiration at the very least would be to get to that and perhaps higher as we go by.
So is 20% an outside chance that we see it by the end of this year?
Yeah, for sure. Yeah, an outside chance for sure.
Ramesh, since we have you on the program, I have to ask you whether, and this is important because, some will say, well, this is a one-off opportunity and the broader pressures, pricing pressures in the US generic market are still there. I remember many months ago when you joined us, you said that the US generic market was like El Dorado. I think that's what you said. And you said, and now there is a drought. Is it getting a little better overall? Will it continue to get a little better? Have you bottomed out as far as pricing in the US is concerned?
In a general sense, there is still a lot of pressure when it comes to, in fact, the OSD business itself. I did speak about the fact that what was a feast for quite some time has now turned out to be a bit of a famine because of the intensity of competition and because of the fact that there has been consolidation of the channel partners leading to price erosion of a higher magnitude. And well, the pressure is on. It's kind of steadying at I would say higher single-digit numbers. It really is a function of, in fact, individual products. Certain products kind of erode faster, certain products erode much lower. So it is really a function of that. But as with insofar as we are concerned, we are kind of pivoting to more complex products. Like, as you say, Spiriva, the inhalations portfolio, the injectables portfolio, the more complex ones there, biosimilars and the like, and for sure specialty at some point of time. And that, I think, is what will actually move the needle in terms of margins over time.
Absolutely. And I think the market's, been realizing that as well, Mr. Swaminathan, and stock's been flying, going through the roof last couple of months. So let me ask you, when you talk about moving up that value chain, getting, eventually towards specialty products, this approval came in slightly earlier than some of the market participants had kind of penciled in. So maybe it'll give people hope that we get more approvals, earlier than anticipated. When you talk about your pipeline, which are the next main ones that you're anticipating? Anything more this year, for instance? And when you talk about, the longer-term outlook on, let's say, specialty, more complex generics, are we talking FY 25? Any new launches there?
For the current year, we can really come out saying that we'll have Darunavir, which is also an exclusive product for us. We have Arunaclin, which is also an important product. Spiriva, from the respiratory portfolio. We already have Albuterol, which is doing still pretty well. We have, in fact, perhaps the highest component of the number of products that we have on the respiratory front across. And this is actually across the world. We also have Foster, which has been launched in Europe. So we've been working on, in fact, a broad range of products, so to speak, and that is what will actually pay us dividends. Equally, we've been doing a lot of stuff when it comes to complex injectables, and of course the biosimilars portfolio. We already have a few products when it comes to the biosimilars. Still early days, but we do, we're building up a pipeline for the future, and that is what we actually deliver.
Mr. Swaminathan, because of all that you're saying, expectations run high, right? And, some of the expectations say that your quarterly revenue run rate, US revenues, should probably improve. You just told us it's around 170 million right now, that it should be northwards of 200 million in the very near future. What's the outlook? Can you do that this year itself? What's the new quarterly run rate?
Insofar as the OSD is concerned, there is going to be price erosion, or at least not perhaps to the same extent as in the past, but it is certainly going to be price erosion. But as you pivot to more complex ones of the like that you're seeing today, you would certainly see this cropping, going up. And there's obviously within the realms of possibility when it comes to the kind of volumes, the sales numbers that you're speaking about.
Okay. All right. Mr. Mr. Swaminathan, just one quick query. Any more pre-approvals, any pre-inspections will be there for Spiriva, or it's all cleared as of now? Because that's a couple of questions that we've been getting as well.
No, from our perspective, it is all in the clear.
It's all clear.
Yeah.
All right. Ramesh, we'll leave it there. Thank you very much. Congratulations once again, and appreciate you joining in with that perspective. And good luck as you roll out that drug from the second quarter of FY24, as you said. Well, the market is just absolutely flat now. I mean, the Nifty, look at that. So once again, a bit of a tease. We, by the way, I mean, just to break my own rule, we made a high of 18,881. This was, I think, on the 19th of June. Basically, you know, this was on Monday. And then today we made a slightly higher high by about 1 point or so, 18,882.65. But not yet. I mean, just absolutely flat, blinking red and green. That's what you have, 30 points. That's it. Well, we'll take a quick commercial break here. We'll be back with the management of Uno Minda. That's the company which is expected to be a big beneficiary of the mass adoption of electrification of vehicles. Sunil Bora, Group CFO of the company, joins us to take questions. And a little later, we have the management of Hitachi Energy India. That should be an interesting conversation as well to discuss business outlook for them. Stay tuned.
Welcome back. Well, the tease continues. We're not yet at those all-time highs, but in a short while from now, hopefully we do get there. We went within kissing distance, but just came a little bit off from those marks. But let's move on then. Let's focus on another big stock from the auto ancillary space. That's Uno Minda. They're a big beneficiary of the mass adoption of electrification of vehicles. The company continues to see orders for the four-wheeler, lighting, as well as EV products. To help us understand how things are shaping up on ground, Mr. Sunil Bora, the Group Chief Financial Officer at Uno Minda, joins us on the show. Hi, Mr. Bora. Good morning. Thanks so much for joining in. Well, give us a couple of numbers. This EV focus, you know, how are things shaping up? Could you tell us what is the current proportion of your order book that's coming in from EVs? And how do you see EV revenues shape up from here on? And I ask this, sir, because that subsidy and FAME, you know, has been scaled back a little bit, which led to a big price increase. Is that hurting? Do you think on ground at some point of time that will hurt your targets that you've set for EV?
Yeah, hi. So let me answer both the questions sequentially. So first is in terms of the order book specifically for EVs you asked. So from EV perspective, you know that a lot of our products are EV agnostic. In fact, almost 99% of products are EV agnostic. So we see in two parts. Our existing products going into EVs and the new specifically EV products going into EV. So as we stand, our order book, when we talk of order book, it's like peak annual value based on the estimates which we get from our customers. It currently stands at around almost 1,800 to 1,900 crores a year. In terms of the split, it's broadly equally 55% EV specific and then non-EV specific, etc. So that's on the order book. In terms of the impact of subsidy, I think it's a little premature. Yes, we did see some buying impact in the last month, but it's a little premature to talk about the EV impact on inventories or the sales in terms of the subsidy impact. But if we see Uno Minda perspective, you would have seen that last quarter, the total two-wheeler volumes, EV volumes were roughly 4.5% of the total sales of the production during the last quarter. And hence, if you see our impact, so normally the way we see is we are broadly equally split into two-wheeler and passenger car segment. Specifically talking of two-wheeler segment, our revenue from the EVs was almost 8.5%. So the kind of outperformance which we have been talking, that whatever the EV segment grows, right, we will have additional delta because of our EV specific components. Mind it, there are a lot of EV components which are still yet to go into production, like the motors, etc., which the plants are under construction. But if you see from last quarter perspective, from 4.5% of industry penetration, our revenue penetration is already 8.5%.
All right, you know, but Mr. Bora, for the company on the whole, 8.5% I think is of the two-wheeler space, right? For the company on the whole, the contribution last year was low single digits, 4.5% if I got that number correct, for the entire company.
Right. That's why it's important to understand. I was trying to say that the total revenue of the company is broadly equally split, around 47% 46-40% was two-wheeler and 53% was a pass car segment. So obviously, if you apply two-wheeler EV revenue on overall, it will be less. That's why I said it's important to see what is the two-wheeler EV revenues on the two-wheeler proportion of revenue.
Got that. Mr. Bora, just to make it a little simpler for our viewers as well, I think it'll help if you can give us the revenue split between EV and non-EV. Both two-wheeler and passenger cars put together. And just to understand whether at all you are drawing slightly higher margins on the EV side. And if that's the case, how much do you want to grow the EV business? That will give us a sense of the margin trajectory as well.
Absolutely, Surabhi, but it's a little early to talk about margins because you know that industry is still in the growth phase. And when you set up a facility, you set up a facility for a larger plant. So you'll have interest cost, depreciation cost, etc. on the full facility, while as volumes are still ramping up. So I would say it's a little premature to talk about margins because we need to first get into stabilization phase. In terms of a second question, how much is the EV revenue versus the other non-EV revenue? So from a two-wheeler perspective, as I said, our EV revenue is roughly currently around 8.5%. And the balance is the non-EV revenue from the two-wheeler segment perspective.
Sunil, hi, good morning. It's good to speak with you. We had Rajiv Bajaj yesterday with us, and we put that famed subsidy question to him. He said, well, subsidy, no subsidy, in a way, I'm paraphrasing, you can't stop the time for an idea whose time has come. The idea whose time has come. So, and this is, EV is the future. So when you say that a lot of EV-specific products that Uno Minda is making is yet to go into production, so will that be, that'll be a higher margin product category as well? Could you give us some sense? And what will that grow to eventually?
So Prashant, you are right. Definitely some of the products, like we are currently under construction phase of the plant, specifically if I talk of the motor for the traction motor for the two-wheeler EV or some of the EV components like BMS, etc. Currently, we are doing from a makeshift arrangement, will go into full-fledged. Plus, the volumes are also ramping up. So yes, from that perspective, the EV revenues will grow significantly. And as we said earlier, that we had sort of two sections. One was the Freevo JV, which we did. We said our peak expected revenue is around 1,500 crores in next 4 to 5 years, and we are still on track. I think by 25-26, we are expecting that revenue to come into. Plus, on top of it, we have this EV motor, which we expect another 400 to 500 crores of revenue in the similar time frame. Plus, these are the EV specific. There are some other components which are not into the joint ventures like the AWAS or telematics, etc. So if we see EV as a whole, the revenue share is going to be much more as we move forward. Like if we see today, the two-wheeler EV revenue industry volume itself is 4%. Like as you said yesterday, Mr. Bajaj also mentioned that definitely this is a phase which is a growing phase, and we don't doubt it. That's why I said it's a little premature to comment what the subsidy impact is going to have on the EV volume. So definitely we are very bullish on the entire sector and the growth prospects. As you know, our kit value in the non-EV, which was the existing products, versus the EV, the kit value actually expand almost already 4x is already delivered, which is going to get under production or already under production. So that is the delta we are talking about when we talk of going into the two-wheeler EVs.
Okay, all right. We'll keep that EV discussion a little bit at the side. Let's understand the company on the whole. We're running a little short on time, Mr. Bora. You've always mentioned that you will outgrow the industry, I think by 1.5 times odd. What kind of industry growth are you working with?
So currently, you are putting words in my mouth. So normally we don't.
I'm trying to understand for the industry, sir. Mr. Bora, what kind of a growth? We are a quarter into this financial year. What kind of industry growth are you looking at?
So if we see currently already the segments we operate in, like two-wheeler segment, definitely we have seen a growth versus last year is already 6 to 8% higher, and pass car segment is already 13 to 15% higher compared to last year. So that's the kind of growth number we are working on for the rest of the year. And we are pretty confident that we should be able to deliver on that outperformance you just mentioned about.
All right. So 1.5 times. So industry growth blended would be how much?
So currently blended will be something around 8 to 10%. Which
all right. So 15% growth is what we should work with for this year. Will that be a fair estimate?
Our target is. Yeah. You are right.
Okay. So 15% growth at least is what we are looking at as of now. And also margin expansion. There was a time when you used to do northwards of 12.5%. And as you've said, most of the input cost is a pass-through, which comes through with a lag. Do you revisit that 12% odd mark for this year, Mr. Bora?
while you will appreciate that we have been able to pass on all the price increases to our customers, I think customers have been very kind. But what it does is you are able to protect only absolute margin, not in terms of percentage. So denominator increases, numerator doesn't. So that was dilutive of almost like 0.9% on the entire group. So 12 actually becomes 11.1, and that's where currently we are. And we do expect that this margin range we should be able to continue for short to medium term.
Okay. All right, Mr. Bora, we will leave it on that note. Thank you very much for joining in and giving us a sense of the business. Well, the market's absolutely flat. Nifty is in no mood to do anything. I think the moment it gets into that 18,880 zone, it pretty much kind of gives up. And that's what happened yet again today, I think probably for the third time. Anyway, while we're tracking the markets, let's also move on to our next corporate conversation. And this is a company which is at the heart of the capital goods / industrial space. I'm talking about Hitachi Energy, and we'll put up the stock up for you. It actually hasn't rallied. The stock hasn't rallied as much as some of its peers, but it's still done about 30-35% this year. So not too bad. Last 12 months, there you go, 34% gains coming through. So we're talking to this company to find out what the prospects are looking like. Of course, Hitachi Energy had a pretty solid fourth quarter. There was a 20% jump in revenue. They also clocked in the highest ever export orders. To talk about the future, we have Mr. Venu, Managing Director and Chief Executive Officer at Hitachi Energy, joining in. Good morning, sir. Good to have you on the show. So I was just, studying the financials, and some interesting trends came out. Last year, your order book doubled. I think from under 5,000 crores, it shot up to above, 7,000 odd crores. The 50% gain in the order book. But at the revenue level, the gain was, I think, around in the teens, somewhere around, I think, 15-16%, a little lower than that. So I think what the street is trying to understand, A, is whether you'll keep getting this kind of order book growth. I mean, will you again grow at 50% this year, given the environment we're in? And B, more importantly, is when do we get the P&L trickle down? How will execution be? And when will the revenue growth start matching up to this very strong order book growth?
Yeah. So thank you. Good morning, and thank you for having me here. And so it's a pleasure to be here. As you know that we are in the business of providing mission critical technology for our customers, whether it is utilities, industries, or infrastructure customers. So our technology, be it product, system, services, is a bridge between the generation and the consumption. So that's where our play around, whether it is enabling the renewables or enabling the transmission and also consumption standpoint. As you know that the energy transition is quite a lot, quite a big opportunities for all of us. And this energy transition is driving a lot of growth in our own sphere, what we call as the high growth segments, whether it is a transmission or HVDC or the renewable and electrification of, like, for example, rail sector. All those things are really driving energy sector growth in those kind of segments where we have a huge play in that, and that has reflected in our orders last year. So last year, we, in addition to growing in our base orders, we also had a large order of HVDC project for city infeed to the Mumbai. So that has fueled growth of more than 80% year-on-year growth of the orders in that. And
so what's the outlook? What's the outlook in terms of?
Coming there, as you know, that the government of India has a very ambitious short-term target of 500 gigawatt of renewable by 2030, 500 gigawatt of transmission corridors by 2030. All these things, we believe that the growth spectrum will continue for a couple of years. And also the net zero of rail, where entire rail wanted to have net zero by 2030, completion of the electrification by next 2 years, 2025. So those are the things where we are seeing a lot of opportunities in terms of the HVDC transmission and things like that. And we believe that this growth momentum may not be to that extent, will continue at least a couple of more years going forward.
Right, Mr. Venu. There are so many segments that you operate in, but very briefly, in a very pointed way, could you explain to us which are the one or two segments which investors should watch for traction, which will do bulk of the heavy lifting in terms of incremental growth for you? And then, wrap that answer up with, say, revenue growth outlook for FY24. What should we expect? And margins as well. Go on.
So let me come to your first point, which Prashant, you're talking about, which are the sectors we need to watch, or which are the segments we need to watch. For example, the transmission, in my view, or in our view, that the transmission market is going to be at least 2 to 3 times more than what it is in the next 4 or 5 years. So that is the one definitely need to do that. Because why it is happening? Because the grid needs to be more and more, and renewable penetration is taking place. The grid needs to be stable and resilient, and that's where the bulk of the projects are coming in. That if you recall in your own channel 1 year back, I told you that the HVDC project, large HVDC project, $1 billion kind of projects, we used to have one project in every 4 to 5 years. But that projects are coming for bidding almost every one project per year. So that's the kind of momentum of shift is happening, the technology adoption, those kind of things in there. So transmission and the renewable is definitely need to watch. And the electrification standpoint, electrification is also another one, whether electrification in terms of the transportation sector or industrial sector is fueling the growth in that. So these are the three things. Revenue attrition, as you know, we are a late cycle business. If you take an order to convert into revenue, it will take anywhere between 12 to 15 months, depending on the product lines, things like that. That's why we are saying a strong order growth will fuel the sustainable, growth of our company, and that's how we are focusing on that. And if you recall, I told you also in your own channel that we are taking a lot of actions to grow higher than the market average, and we have also consistently been growing in the last 3 years. That's why our order backlog is more than 7,000 crores, which will continue to yield revenue growth in the going forward.
Can you put a number to it, Mr. Venu? You're saying strong order book growth. Can you just put a number? Your order book grew 50% last year. Should we expect another 50% this year? Some rough number ranges help.
No, numbers I don't like to put it. What I can tell you, I give you pointers. The market is growing right now with a high single digit or very close to double digit. So we want to grow higher than that. And we continue to do that. One is the domestic market.
You'll grow at 1.5 times, sir? You'll grow at 1.5 times the market? 2 times?
No, I don't want to put the number into that. But that's what our take is, that we want to grow higher than the market. That's number one. And
all right, but you'll outgrow the market, so we'll take that on board. Mr. Venu, in the last time as well, we spoke, you were sounding quite optimistic on business. And the positive for me is in your last quarter, that's quarter four's numbers, the March quarter, the margins came in at the highest we've seen, I think, in the last 12 to 13 quarters. Could you tell us what is the scope of improvement from here on? And I believe that in the next couple of years, by 2025, you have a double-digit margin target. Is that correct?
Yeah, what we said that by end of financial year 25, so we wanted to win a double-digit operational EBITDA level, and that's exactly our backlog is building up into that. And the last year, as you know, the margin has impacted is mainly because of the shortage of the semiconductors and then chips, etc., which go into the bulk of our product lines across the businesses, and that has affected. But we're still not out of those things yet. But I think things are becoming better, I would say, and those things should reflect in the later part of the year.
Okay, all right, Mr. Venu, we will leave it on that note for today. Thanks very much. We look forward to more detailed conversation next time around. Thank you for joining in. That's Hitachi Energy striking an extremely buoyant and optimistic note about the business this year. Well, let's just go back to Lupin for a bit. The stock is cooling off because it had that 5-6% rally yesterday, and it's been running anyway over the last couple of months. Ekta, in fact, has been in conversation with Nilesh Gupta, MD of the company. Let's find out some more details on this big approval that's come in for Spiriva.
Yeah, ready? Mr. Gupta, thanks very much for joining us. Well, I wanted to start with the biggest opportunity, or one of the biggest opportunities. Congratulations on the approval for Spiriva generic in the US. Give us the dynamics. How much do you think you can probably make from the drug?
We never talk about this. I think it's a great deal for us. I think it's a great moment for India as well. This is the first DPI for Spiriva. It's the first DPI for us to be approved by the US, but it's also the first DPI to be approved out of India for the US. So I think it's a big deal. From our perspective, it's obviously a large molecule. It's, $1.2 billion or so. It's going to be slow. It's never a very rapid switch with these complex generics. So we hope to launch in the upcoming quarter. And obviously we're the only generic at this point of time. So it's going to be a nice opportunity.
Any foreseeable competition that you see probably in the next 2 to 3 years? Any filers that you might have heard of?
So no filers as of now, as we're told. There likely will be an authorized generic at some point of time, but other than that, we don't see competition at this point of time.
The average assumption is that the price erosion would be around 35 to 40% and market share of around 35 to 40% for Lupin eventually. Is that a fair assumption that we are working with? How aggressive do you think Boehringer Ingelheim will be?
Yeah, you're starting to triangulate your numbers. No, from our perspective, I think we have to see. This is a unique kind of product, right? I think it's a very complex product. There's a lot of regulations that we had to go through and the like, and I think all of that should get reflected, one, in the pricing that we're able to command, but I think also in the market share that we eventually get as well. So I think people will obviously appreciate the fact that there's a true generic, but the offtake will be slower, as we saw in albuterol as well. And then obviously the pricing, we'll see how the dynamics work out.
$140 million is the peak estimate in terms of sales, probably by FY25 odd. Is that a fair assumption?
I heard that number. I don't think that number is unfathomable. We have had generic products even bigger than that, so let's see where that goes.
What does this do to the US sales? Because at one point in time, you did hit $200 million in terms of quarterly sales. Then you came down to around 175 odd. What is the average run rate that we can now expect because of Spiriva generic?
Yeah. So we're at around 180 odd million at this point of time, right? And we'll launch in the next quarter. I think obviously it gets back to north of that 200 million. I think at peak we were over 1.1 billion in the US. So there's a lot of room for us to crawl back before we start growing from the highest level that we achieved. But I think products like this, and I think this gives a lot of confidence for future products, right? So if we can do a DPI. Now, there's any other DPI that we can do as well. There's a pipeline of over 30 inhalation products in our portfolio itself. So I think there is a lot of room to grow out of this one. Thankfully, we've toughed out. We've been saying that, okay, this is the bottom, this is the bottom, this is the bottom, and the bottom kept going lower and lower. I think we saw that in Q4. We're seeing that in Q1 as well. We're back to that $170, $180 million kind of number. And that number is a solid foundation to build on with products like this.
Okay. $850 million in terms of US generic sales by FY25.
Yeah, I think that's a pretty fair number. We should be able to do that and maybe some more.
Is US pricing pressure, is the worst behind us? Because Lupin at one point even exited some drugs.
Yeah, we exited quite a few products and we were not the only ones. There's a whole bunch of people who exited a bunch of products, primarily around the oral solids. I think the supply continuity seems to be more of a conversation. I think pricing will always be only downwards. So there's all, I think we guide for high single digit kind of pricing erosion that will remain.
And margins, you have improved in terms of margins. I think it was a 6-7 quarter high. How much more do you think you can do in terms of margins now? Exit run rate was 18% is what you guided for.
Yeah, we would still hope for that. I think certainly we want to get back to that. We're pitifully low. So there's a lot of room to improve. We're actually bottom of the pack and we're not used to being underperformers. So there's a lot of room for us to grow. I think we already saw that from Q4. You will continue to see this improvement every quarter and the exit remains, north of 18%.
Okay, Nilesh, quick last question. What is the larger picture for Lupin? Because you have seen some rough times in terms of the US pricing, compliance issues, but now with this approval, with Suprep in your portfolio, albuterol, all of these key, larger complex generic drugs, where do you see the larger picture for Lupin if you're talking, say, 1 to 2 years down the line?
Sure. I think the larger picture is clearly the pivot to complex generics, doubling down on India, and starting innovation again. And I think that has to be, because all of this is sticky compared to just regular generics in that sense. So I think the pivot from oral solids to complex generics with products like this is happening, but there's a lot more to be done. Injectables, we've not even started. I think you've seen a lot of approvals from injectables, clearly more to be done there. India, obviously we're doubling down. We added 1,000 people. We're going to keep adding and we're going to keep growing in India, and then definitely restart innovation at some point.
Thank you, Nilesh. Always a pleasure. Thanks very much and congratulations.
Thank you.
All right, that's the big man at Lupin giving us more details about the big drug approval which the company has got through. The market is like 2 points lower, nothing. 18,854 is what we have, but mid-caps is where the action is. We'll have to take a break, and after we do that, we'll come back. Midesh will be with us with some technical trading ideas, and we'll highlight what's happening in that mid-cap and small-cap part of the market. Stay tuned.
Welcome back. Well, the market's as quiet as can be, well, virtually unmoved as we speak. The Nifty Bank, though, is showing some bit of traction. That one, in fact, is up close to around 50 points. And Max Financial and Pyramid Enterprises, both of them have moved to the high point of the day. Mitesh Thakkar is back with us to give us his call on the markets as well as individual stocks. Mitesh, welcome back. Go ahead.
Well, the call on the index remains same. I think, we are in a sluggish mode, range-bound contracting. So not much of action over there. But on the stock side, Balrampur Chini has come on the focus today. I think sugar anyways is having some kind of positive news flow with the shortage of production globally. And today there's some kind of breakout on the charts of Balrampur Chini. Disclaimer that we have some core options position over here, so vested interest is there. I would recommend buying here with a stop below day's low of 398.5 and a target of 425. And HDFC Limited was a call yesterday. I would be comfortable buying it today as well. Keep a stop just below levels of 26.95 and a target of 27.60 is what I'm doing.
Okay, so those are Mitesh's calls. Mitesh, just want to get your incremental take on a couple of more metal names. We've seen some consistent weakness on the likes of, Tata Steel, JSW. They've been kind of struggling for a bit. Any trades on the short side that you would look at taking at all?
So I think, Tata Steel is something, which is given a kind of a gap down today. JSW Steel, I don't want to short. The structure is very good over here. But Tata Steel, I think, I would want to see if it starts getting towards the low again. And if it starts breaking today's low, then I think with a stop at 113, I think, this can be shorted for a decline toward levels of 106, 105.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on a couple of stocks then that are moving around as we speak. Vivek joins us to tell us about JSW Energy. Antique, I think there's a double upgrade coming out there. Vivek, tell us more.
Well, that's right. JSW Energy is the stock in focus today morning. A double upgrade coming in from Antique on the stock. So they've gone ahead and upgraded the stock to a buy rating now. The target price has been kept at 316 rupees a share. Couple of key points that they highlight that they believe will hold JSW Energy in good stead. Number one, the company is, they're saying that the company is on its way to commission close to 10 gigawatts in FY25, half of its stated FY30 target. Or the other thing what they're saying is that this 10 gigawatt commissioning will actually go ahead and yield the company close to 7,500 to 8,000 crore in EBITDA by FY 2025. Also, the company is making rapid strides in energy storage from battery, pumped hydro storage, significant announcements being made there, as well as the green hydrogen segment. In fact, what Antique is saying is that the ROE was earlier depressed because the group believed in lower capital allocation and faster debt reduction. However, they believe that JSW Energy will reach 8,000 crore EBITDA by the end of FY25, and along with that, interestingly, the recent acquisition that JSW Energy made of Mitra Energy, they believe that the run rate of the EBITDA there has improved tremendously. The company is on its way to now generate a net run rate of EBITDA of close to 1650 crore, and that makes the acquisition valuations, earlier which was looking at around 7 times EV to EBITDA, now close to 6.4 times EV to EBITDA. So even below what a new greenfield expansion would have been. So on the back of that, the double upgrade has come in, and the stock is rallying in the session today.
Okay, got that, Vivek. Thank you very much for that. Well, let's focus on Z once again. Z has been fairly range-bound today. Surabhi is joining back in because there are just so many moving parts to this story. Surabhi, so tell us the latest. I guess, today's fresh news is the statement that Mr. Puneet Goenka has made to one of the papers.
That's correct. So he's, interviewed with one of the papers, and in that he said that merger is of the utmost importance to him, and the merger should go irrespective of the fact that if he is the CEO or not. He further added that merger will benefit 96% of the shareholders, and therefore it is in the larger interest of the ecosystem for this to go through. Now that statement, along with Sony's statement yesterday that they are committed to the merger and they are keeping an eye on the SEBI developments, all of this should bode well for Z.
Okay, all right. Thanks a lot for that, Surabhi. Well, Sonal joining in to tell us about Paradeep Phosphates. You have a big brokerage call coming out there. Sonal, tell us more about it.
Oh yes, so Antique has initiated coverage on Paradeep Phosphates and they are quite bullish on the stock as well. They have a target price of 100 rupees per share on this one. So what they say is that it is the second largest phosphatic fertilizer player in the private sector, and post expansion that the company is undertaking, their fertilizer capacity will go to 1.8 metric tons from current 1.2 million metric tons. Acquisition of Zuari Agro's Goa plant is something that will aid to the market share as well and also increase profitability of a particular platform as well. They believe the company has one of the strongest business models in the phosphatic fertilizer space, and this is something that they can build on as well. They value the company with at a valuation of 12 times one-year forward earnings, which is a 20% discount to the other big phosphatic fertilizer player, that is Coromandel International. They have a buy rating with a target price of 100 rupees per share. On the back of this, we are seeing some excitement in the stock today.
All right, plenty of excitement. Sonal, thanks a lot for joining and telling us that. Big volumes out there. The stock is spiking up close to around 6% as we speak. Some flashes coming in on IPCA. They failed to establish adequate quality control for a particular unit. I think these are details that are coming. We've got the US FDA observations to IPCA Silvassa unit. So that's why that stock has moved to the low point of the day. It started off in the green, but now it's slipping on the back of these observations that are coming out. 3 observations. And I think, they'll flash for you on the screen in terms of what those, observations are. Failure to thoroughly review any unexplained discrepancy. Well, that's one of that. Responsibility and procedures for quality control were not followed. So it appears the street is not taking this very, very well. Explains why the stock has moved to the low point of the day. But from the banking pack itself, there are a couple of stocks that are under pressure. Abhishek joins us to run us through a note that's come in on IDFC First Bank. Morning, Abhishek.
Morning, Nigel. So CLSA has written on IDFC First Bank. They have downgraded the rating to underperformance from buy. However, they have increased the target price to 85 from rupees 80 that they had earlier. They say that IDFC First Bank has been one of the best performing stocks, given the fact that it's outperformed Bank Nifty by about 30-35% on a YTD basis, that is year-to-date basis. So while the bank's compelling growth story is very good, and they think that the valuations at 1.8 times price to book value on a one-year forward basis do not reflect the fully ROE profile margin that will improve on a year ahead or a 2-year ahead story. So they expect a 14% ROE for IDFC First Bank by FY26 versus the 11% that the bank has reported in Q4 FY23. So hence the run-up with valuations is not in line with ROE is what CLSA has mentioned.
Okay, got that, Abhishek. Thanks very much for the details. Well, let's now focus on the big Q that, of course, came in from the U.S. In his testimony before the U.S. Congress, Fed Chair Jerome Powell reiterated the central bank's tightening measures are yet to take full effect and hinted at more rate hikes by the end of the year. Take a look.
I guess I would say this economy is very strong, and what's driving it now is just a very strong labor market. There's still significant demand for workers. There are more job openings than there are unemployed people. Wages are moving up, and that's really what's driving the economy forward. People's disposable incomes are coming up. Inflation is moving down gradually. The thing that troubles people, and I think the thing that accounts for the surveys you see, where despite a historically strong labor market, people are still concerned about the economy. It's really inflation. So this is our job, is to bring inflation down. The way we do it is by raising interest rates. And while that can be painful, what it does is it gradually slows down demand so that supply and demand can get back into alignment, and so that we can have inflation running at 2% and people can get on with their lives and basically not have to think about inflation. The level to which we raise rates is actually a separate question of the speed with which we move. Earlier in the process, speed was very important. It's not very important now. We were at 75 basis points for several meetings, then we were at 50 basis points, then 50 basis points, 25 basis points at 3 consecutive meetings, and now we're moderating that pace. So we only have one interest rate to raise or lower. It's not true, but mainly one main interest rate to raise or lower, and it applies to everyone. But I would say that inflation hits LMI communities and people generally at the lower end of the income spectrum much harder than people in the middle or at the high end, because high inflation can get you into trouble right away if you're living on a fixed income just to cover the basic necessities. So it is for the benefit of those people that we must get inflation under control. It's for the benefit of all Americans, but particularly for those people. And we keep that in mind as we are strongly committed to getting inflation back down to 2% over time.
All right, with that, we are going to take a very, very quick break. On the other side, it's a special segment. It's the economy. Today, Lata gets chatting with Ashish Gupta, CIO at Axis Mutual Fund.